Hello, my fellow investors, and welcome back to another viewer-requested fundamental analysis video. Yes, guys, we are finally bringing this back. Turns out that, well, there's earnings has died down, and seeing that we just started September, and, well, when we hit October, it'll probably start all over again with the whole bank stuff. So let us start your recommendations for the stocks that all of you recommended back in July. So we're gonna spin the wheel and see what company we should analyze today. And we got the company VRTV. Alright, this is starting off with a one that I've never heard of before. So, this one was brought up by, if I can find it, but of course it was Tony. Of course. Sup, Tony? It's been a while since we have gone through this. Yeah, so let's analyze this company, guys. VRTV by Tony. Here is the comment where he recommended this. And let's see if the current share price this company's buy, and also if they had earnings. We'll go over through those earnings really quickly. So with that said, let's get started with this analysis. Alright, guys, so this is the company called Veritiv. Now, I've never heard of this company before, so let's take a look at what they actually do in their company profile. Now, I thought that this was going to be in like a foreign country. No, it's in Atlanta, Georgia, so it's right here. We got over here, Veritiv Corporation operates as a business-to-business provider of value-added packaging products and services, facility solutions, and print-based products and services in the United States and internationally. It operates through packaging, facility solutions, and print segments. The packaging segment provides packaging products materials with flexible, corrugated, and fiber, ancillary packaging, rigid, and equipment categories. All right, I think that's pretty much it. This is a company that, well, obviously there's more, but I think this is a company that is actually kind of interesting because, well, if we come back over here into their website, we can see this kind of stuff. And, you know, it's funny because, like, whenever you order stuff from, like, Amazon or something like that, you get this kind of things, too. So this is actually kind of cool. I think this is a company similar to that of Waste Management that I don't think that they'll ever go away because, well, if we go more towards, like, the whole Amazon kind of delivery thing, well, packaging will eventually get more and more sophisticated, you know, obviously like more renewable, that kind of stuff. And I think they're going to be in the front lines when it comes to that. And I don't think it's going to stop either. So this is already looking interesting. Let's take a look at their earnings summary. Here we got EPS normalized actual. It doesn't have any. EPS gap actual came in at $5.15, beat by 13 cents. Revenue $1.46 billion, which is missed by $159 million. And this was announced on August 8th of 2023. So let's actually take a look at this earnings. And of course, this will be linked in the description below. I'm not going to go through all of this, guys. Then the video would just be way too long. So we got over here second quarter highlights. Net income of $70.7 million, a decrease. Whoa, a decrease of 22.4% from the prior year. Diluted EPS of $5.15 decreased by 15.8% from the prior year. Record second quarter adjusted EBITDA margin of 7.7%. 14 consecutive quarters of year-over-year adjusted EBITDA margin expansion. Here we got the comment from the CEO. The second quarter highlighted the value of our diversified and complementary portfolio of products and industry verticals. Despite challenging macroeconomic conditions, adjusted EBITDA for both packaging and facility solutions improved sequentially and on a year-over-year basis achieving record adjusted EBITDA margins for these segments, said Sal Abate, Chief Executive Officer. This strong performance partially offset continued intense industry-wide destocking, and slowing demand headwinds in the print solution, resulting in record second quarter. So basically, I read this and I'm just like, this had nothing to do with them particularly, right? This is things outside of them. So seeing that this happened, you know what? If this did fall, this might actually serve as a pretty good buying opportunity. Looking a little bit further down, we can see this on the 3-month ended. The net sales were $1.5 billion, a decrease of 20% from the prior year. Organic sales decreased 15.4%. Net income was $70.7 million, as we saw. Basic and diluted earnings per share of $5.22 and $5.15 respectively, compared to $6.24 and $6.12. So that's a pretty big drop again. And adjusted EBITDA of $112.2 million, a decrease of 17.7% from the prior year. Now, what's interesting to note, guys, is that we can actually see the free cash flow right here for the 3-month ended. We can see here that net cash provided by operating activities was 94.4 million and free cash flow was 91.3. For the 6-month ended June 30th, 2023, net cash provided by operating activities was 165.3 million and free cash flow was 159.3 million. Quote, "We are pleased with the strong free cash flow of nearly $160 million generated during the first half of 2023, said Eric Gurin, Chief Financial Officer. And when it comes to the guidance, in light of the previous announced transaction with CD&R, Veritiv will not provide guidance or host a conference call or webcast to review the second quarter 2023 financial results." So with all of that said, let's jump now into the spreadsheet. And of course, guys, again, the earnings will be linked in the description below for you guys to read for yourselves. I can't go over the full thing in this video or else it will be just way too long. We get the ticker for VRTV, market cap of $2.3 billion, a P of 7.59 with a current share price of $168.56. Taking a look at this graph, we can see that on the 1 year, they're up 39.12%. And on the year to date, they're probably down. Whoa, actually, no, they're not. They're up 43.41%. It's funny because, like, with all of that we just read, you know, decreasing everything, they're at near 50. Well, actually, yeah, they're near 52-week highs. Look at this, 94.50 for 52-week lows and a high of $169.85. As if I'm recording this, it is September 6th, and well, today this thing gained around 0.3%. So even with all of that being, you know, near 52-week highs, this PE is still really, really low. Now, they do pay out a dividend of $2.52, which it is a yield of 1.5%, a payout ratio of 11.35, no 5-year CAGR, and 0 consecutive years of dividend payment. And if we take a look at this dividend history, we can see that, well, the reason why the 5-year CAGR doesn't exist and they have 0 consecutive years of dividend increases is because, well, they just started paying this dividend out on November 16th, 2022. So, yeah, they don't even have a year yet. That explains it. So far, this isn't looking too bad. However, again, that kind of dividend uncertainty doesn't necessarily tell me that it's a good investment when it comes to the form of a dividend. Even still though, their ex-dividend date passed as of August 16th, payout date will be on the 13th of September, and of course they do pay this quarterly. And based off of the current shares outstanding, they pay out $34.27 million, and after this is paid off, guys, in regards to the 5-year average free cash flow, they're left with $135 million, and in regards to the last year's free cash flow, it is $196. These payout ratios are really good. 15% for the last year's free cash flow and 20.23 for the 5-year average. Looking into these fundamentals, now starting with the net income, we can see some negatives here. 5 years ago of negative 15.7 million to 1 year ago of 337.9 million. That is an increase of a whopping 2,252%. Now, these negatives would be a little bit concerning. This did dip from 5 to 4, but all in all, you can see that it is increasing. My one concern isn't even the negatives, is mainly this right here, that massive jump from 2 to 1 year ago. So for this reason, guys, I'm actually going to have to give this thing, I would say, like a 45%. Looking now into the free cash flow, we do see some negatives one more time. However, my main concern here is, well, actually it's not even too bad. You can see that 5 years ago it was negative 30.4 million. 1 year ago of 230.5 million, increase of 858% with an average of $169.4 million. You can see that from 5 to 3 years ago was a pretty consistent increase. 2 years ago it fell, but that could just be, you know, macroeconomic related issues. And then 1 year ago it did jump, still lower than that of a 4 and 3 year ago value. So I'm actually going to give this thing, I would say, roughly the same of 45%. Looking now into the revenue, unfortunately, the trend for this one is decreasing. In fact, 5 years ago it was $8.7 billion. 1 year ago of $7.15 billion, decrease of 17.82%. The lowest point here was 3 years ago during COVID. However, you can see that from 3 to 1 year ago, it's slightly increasing. So actually, it's an increasing at a pretty good rate. So for this reason, I'm actually going to give this one, I would say, like a 50%. The assets minus liabilities is actually increasing at a pretty good amount. Small dip from 5 to 4, but all in all, it's pretty consistently increasing. Average total assets, it is 2.3 billion. Average liabilities is 1.6 billion. Doing this difference, we get 679, let's just say $680 million. I'm actually going to give this, guys, like a 95%. When it comes into the cash flow minus liabilities, this one caught me by surprise. This is looking amazing, consistently increasing, all except for 1 year, 2 years ago, where they slightly dipped. But as of 1 year ago, they're at negative 1.1 billion, which is a lot lower than the average of negative 1.6 billion. All in all, this is a really good looking graph, I'm going to give this, guys, a 95%. When it comes in other shares outstanding, this one's surprising too, because the overall is actually to decrease. 5 years ago of 15.9 million shares to today of 13.6 million shares. This is such little shares outstanding, which is probably the reason why the price is like $168 with a PE of 7, right? Nonetheless, though, on the 5 year, this is a decrease of 14.5%. Previous to the current year is a small increase of 0.75%. You can see here that it's not consistently decreasing. They also had that slight increase from 5 to 4 years ago, but all in all, it's looking really, really good. I would say, guys, a 95%. When it comes into, now lastly, the cash and equivalents, they currently hold $44 million with an average of $59.45 million. Overall grade is looking interesting. 64% with a net income of 45, free cash flow 45, revenue 50, assets minus liabilities 95, cash flow minus liabilities 95, interest standing of 95. Again, for 64%, it's telling me that they just need to fix a little bit of their profit metrics, and this would be a pretty good solid company. Now, they did just mention in their earnings that they have some macroeconomic issues, but then again, this might actually serve itself as a pretty good thing, seeing that, well, depending on what the price is today, even though we're at all-time highs, this may actually serve itself as a pretty good buying opportunity, assuming that we are getting the value based off of this kind of free cash flow. So let's take a look at this. We got now the discounted free cash flow, not inputting anything. We got $242.62, not adjusting for debt, and then $210 adjusting for debt. Right then and there, any number that I put, well, I'm actually going to take that back because unfortunately we do have Seeking Alpha saying that this will go into the negatives, right? And we just saw the earnings report that the net sales was also a decrease. So we're going to have to play with these numbers a little bit. Nonetheless, though, it's looking pretty good right here. Now, starting with the predicted share buyback, we can see that they bought back a really good amount of shares, but I foresee them actually increasing shares in the near future, especially with their net sales going down. I'm going to say, guys, -5 for the low assumption, -3 for the median, and let's say -1 for the highest assumption. Negative just means that they're going to issue. Now, in regards to the revenue, we can see that the forwards estimated at -2.1, and again, their earnings just showed that their net sales on the 6 month is decreased by 19. Now, I'm not going to say 19%. I'm going to say something along the lines of like Seeking Alpha. I'm actually going to say around -6 when it comes to the revenue decrease. Let's go now to like -5 and then -4 in the next 5 years. Doing this, guys, we get $185 to $207, not adjusting for debt, and then $154.29 to $175.45 adjusting for debt. Margin of safety of 5, 10, 15. We got $131 for the lowest, and then $166.68 for the highest assumption. So we can see that in some cases here, we are already good, or if not, just like right there on the hairline. Like you got over here the median assumption, adjusting for debt, 164, current share price of 168. Yeah, guys, this is actually looking fairly decent. Now, this is just based off of my assumptions. So please, just like I said that I'm going to put the earnings report in the description, this calculator is also available for free. Please make your own due diligence for yourselves. This is not due diligence. This is just me giving you the basic rundown of the earnings report and my basic assumption. I know nothing of this company. This is not financial advice. So I highly suggest everybody does their own due diligence for themselves. All we ask in return, guys, if you do enjoy this type of content, again, I am now going to take your guys' recommendations. I will try to get through them as much as possible before the next earnings starts. But yeah, I am taking out recommendations. And if you guys enjoy this kind of content, the only thing we ask for in return is just something free, guys, is to just like, subscribe, comment, and of course, share. Our goal is just to grow YouTube, to grow Rumble. That's really it. So thank you so much for everybody who has done that so far. We really, really do appreciate it. Now, looking at this dividend, they don't have a big yield, but putting in $5,725, this nets you $85.59 in annual dividends. And lastly, when it comes to the September 15, 2023 option chains, there's literally no bid on the calls or the puts. If we go to the October one, we see actually, wow, there's literally nothing here. Yeah, look at that, guys. We only have one bid for the puts, and that's $5 for a strike of 165, and one bid for the calls at $15 for a strike of 170. So yeah, another company that you would use to, you know, sell and buy options. Really isn't much of anything here. All in all, thank you so much, Tony, for the recommendation. Yeah, it's a really interesting company. I gotta say, if they were to just fix a little bit of their profit metrics, this would actually be decent, right? It would actually be decent. All in all, it's okay. Now, I am taking, as I just said, recommendations. So if you guys would like me to use them, just mention them in the comment section and I'll add them to the wheel. What I'm planning to do is go through all of the July ones, then whoever makes any suggestions for like September, I'll put you guys aside, and then when I finish all July, then I'll do the September ones, right? Just keep that in mind. That's how I'm gonna do it, just so that way it's fair. Just so that way somebody who just like requested in September gets it, while somebody that requested it back in July still hasn't gotten it, just to make it a little bit more fair. So yeah, guys, that pretty much does it for this video. Y'all can follow us on the news exciting link is in the description below. So with that said, peace out, and we'll see you all next time.